money supply or that it increase interest rates anytime soon. In order for the monetary policy makers to consider something like this, the inflation data should prove to be more sustainable. So we should see rates like the one from January more often, which means that companies can, more and more transfer higher prices onto their customers, while at the same time cost for credit that companies have remains very, very low. A perfect environment for investors on the stock market, and that's why today the German share index DAX here, for the first time in nearly 2 years, rose above 12,000 points temporarily.
Fantastic. But again, on the corporate news front, Conrad, how did RWE ends up with nearly 6 billion euros in losses, and how's the market digesting this negative news from these energy giants?
Well, the share price of RWE, the large utility, is down around about 1%, so not a very hysterical reaction, I would say. Well, and investors saw this coming. After Germany, or our government, the Chancellor Merkel, 6 years ago decided that Germany quit nuclear power, a very long-lasting quarrel continued between the government and the utilities about who would pay for this exit from nuclear. Last year, a decision was found. Utilities like RWE and also E.ON have to pay a high amount of money for this exit from nuclear, and this money is now booked in the balance sheet. What's positive is that RWE promised its shareholders a dividend next year. So there is some silver lining here, and something to be more upbeat about also for investors of RWE.
Okay, thank you very much, Conrad, and congratulations on the DAX crossing the 12,000. Hold it there, folks. We'll talk about this market again tomorrow. Conrad Busen from Frankfurt Stock Exchange there for Channels Television. Look at the U.S. market, where the stocks index futures are pointing to a bit of a mixed open today. All the major indices are in the red, around 0.1%. The broadest was the NASDAQ futures and the S&P 500 futures. That was a really serious rally on Tuesday. On the data front, Wednesday, we'll see existing home sales data for January at 10 o'clock Eastern, with the latest minutes from the FOMC meeting due to be released at 2 o'clock Eastern time. Traders aren't expecting much reaction to what should be a relatively old news from the U.S. Central Bank. On the earnings front, Host Hotels, Norwegian Cruise Line, TJX, and Welltower are among the major companies scheduled to report before the opening bell. Meantime, Tesla Motors, HP, Odessa, Hewlett-Packard, L Brands, Boston Beer, and Cheesecake Factory are all due to report after the market closes about 10 o'clock Nigerian time. In Asia, the markets mostly higher Wednesday, tracking the U.S. Tuesday gains as investors await policy details from the Trump administration on tax reforms and deregulation. The Japanese Nikkei 225 closed near flat at 19,379, while across the Korean strait, the Kospi gained 3.68 points. Toshiba shares jumped 22.32% to 224.7 yen. That's massive, following a Nikkei Business Daily report that says the troubled conglomerate asks potential bidders for its memory chip business to value the unit at a minimum of 2 trillion yen or even more. In Australia, the benchmark ASX 200 reversed losses to close higher, 14.07 points. The Hong Kong's Hang Seng Index climbed about 1%, that's precisely 0.85% in afternoon trade. The Chinese mainland market also gained. The Shanghai Composite up 7.61 points, and the Shenzhen Composite added 6.19%. We're back to Nigeria, where we're trying to get a sense of how the fixed income has been treated since those announcements and actions from the central bank on Monday. So this is the third day of the week. Let's get a bit of the fixed income market into the mix of conversation right now as we talk to Oladipupo Ola Adeoye, who is a fixed income dealer with UBA Group. Is joining us via telephone. Good afternoon.
Yeah, good afternoon.
Thank you very much, Dikukwa. We thank you for your time. How are you folks dealing in fixed income, treasury bills, bonds, and all that, taking all the news and events in the FX market on board of what is going on with the fixed income space?
Yeah, I think from what has been done on the FX side, the impact in our market is a shortage of Naira liquidity, which is causing a bearish activity in the treasury bills market. It is expected for that to happen because now a lot of Naira liquidity is going to the central bank in exchange for USD based on the new arrangement. So it's expected that we'll see the bearish trend, and that's what we're seeing in the treasury bills market primarily. The bond market, however, is relatively stable, being that it will be a last resort for people to exit a long-term instrument just because of a temporary shortage of Naira liquidity.
Yes, of course, the central bank has this regulation for those of you in the markets on Broad Street. If you make bids for dollars, you can't bid same time for for treasury bills and bonds as well because of the settlement dates and what have you. And this is where you talk about the liquidity. Do you see this continuing to the end of the week? We are to Wednesday already.
Into the end of the interestingly, what we've seen between yesterday and today is that the interbank has dropped from levels of 200% to about 25% today, which shows that the pressure is easing gradually. And again, we're expecting fact payment by tomorrow or next. So we think towards the end of the week, the debt and liquidity would normalize and the market can be back to normal levels.
Okay, thank you very much for your time. Today, Oladikukwa Adeoye, fixed income dealer with UBA Group, one of Nigeria's tier 1 banking institution on Broad Street. We appreciate your time. Okay, when we come back after the break, we talk about Ghana. The new president is complaining about the economy he inherited from former President John Mahama. And of course, we have some latest news on Nigeria's sales managers index. We'll read that very quickly to you from the World Economics in London when we come back.